Breaking news, Bed Bath & Beyond filing for Chapter 11 bankruptcy after last-minute attempts to keep the company afloat unfortunately failed. We've got Market Watchers Jonathan Hoenig and David Nicholas here to tell us more about what this means, not only for Bed Bath & Beyond and for all those coupons that my wife has, but more importantly for the entire economy. Jonathan, even in the best of times, you have what's known as creative destruction. That is, companies that for one reason or another have to move on and leave space for others. But is this more than just bad business decisions made by one company?
No, David, this is the market at work. It sounds a little dark, but I actually think we should be cause for celebration here. I mean, Bed Bath & Beyond had poor management. They didn't react to the Amazoning and the Walmarting of the world. And keep in mind, 20 years ago, they called Bed Bath & Beyond a category killer. They put a lot of small businesses out of business. So, David, what will happen is shareholders lose money, employees will find new, more productive, usually higher paying jobs, and all of that capital that was sucked into basically a very poorly performing business will be reallocated. So this is the system at work. Would we be better off if government stepped in to save J.C. Penney or Bed Bath Beyond? This is cause for celebration. This is capitalism at work. All right.
David, on the other, first of all, we have great sympathies for people who work there. It's very tough to be working for a company that goes out of business. But, David, the American consumer, a lot of questions about whether they're healthy right now. We know the credit card debt situation is getting precarious. A lot of folks living paycheck to paycheck. Does the demise of Bed Bath & Beyond mean anything about what's happening with the American consumer?
I think it does. Obviously, it's getting tougher for the American consumer. Obviously, the cost of living, the cost of goods, the cost of services are going up. But, shoppers and consumers, they also vote with their wallets as well. Bed Bath & Beyond, they made a political statement. I know this wasn't everything, but a couple of years ago, right after COVID, Bed Bath & Beyond said they were pulling all of Mike Lindell's MyPillow merchandise from all their stores. And Look, that alienated a big portion of their customers. So I just think it's another thing when you're already struggling, you don't want to alienate your customer base even more. So bad management, but it is also telling the greater consumer as well.
Jonathan, I don't want to get too wonky now talking about the U.S. dollar, but it has been under a lot of pressure. Of course, there's usually an inverse relationship between the value of the dollar and the value of gold. We saw gold shoot up to $2,050 or more than that a couple of weeks ago. Now gold has come down. The dollar seems to be strengthening a little bit. What's happening there?
David, I think this is a long-term trend. I mean, keep in mind, when you're talking about commodities like gold or assets like the U.S. dollar, these are trends that play out over years. So just as gold rose almost every year from 2001 to 2010, I think that trend is still in place. We own gold over at capitalspig.com. And, David, the fact that Coca-Cola is up today, McDonald's is up today, it's not far from its all-time high. These are the stocks that tend to do well in a falling dollar environment because so much of their income and revenue comes from overseas.
Okay, you made it non-wonky, which is great, David. I want to ask you to make this next one non-wonky, too. The Fed, next week, it comes out with another rate decision. Many people are saying it's going to be another quarter point, and then it's done. The real question that I have, though, is the Fed is losing money now. It's made some of the bad decisions, not like SVB, but it's made some of the bad decisions that have been made elsewhere. Should that be a concern for Americans?
Yeah, and I've always said the market's looking for one rate hike. I still think we probably see two more rate hikes because I think inflation is not going to come down as quickly as the market would like. But, I mean, the Fed, when you have an unlimited balance sheet to continue to print, they can absorb losses a lot better than obviously a bank or another financial institution can. So I don't think the losses are as concerning just given their unlimited nature of their balance sheet.
Excellent. David Nicholas, Jonathan Hoenig, gentlemen, great stuff. Thank you very much. Good to see you both.